This is interesting because you see a day like today, and you have this happen, okay? Lawmakers led by Democrats urge the Fed to halt rate hikes ahead of Wednesday's announcement. A group of lawmakers, including Senator Elizabeth Warren and Representative somebody, urged the Fed to halt its rate hikes. The request came the day before the Fed is expected to raise the benchmark by another quarter point, which I don't think they should do, but I'm not the leader of the Fed, so it is what it is. The lawmakers pressed federal Fed Chair Jerome Powell to avoid engineering a recession that destroys jobs and crushes small businesses, right? And this isn't the end of this, folks. You got to understand this, okay? We've got an interesting situation here where, inflation's been high, but the bigger fear from a lot of folks, at least on the Democrat side, is we're going to end up having a major recession or a recession of some kind going into the presidential election. If that happens, then likely, I can tell you, it's almost a for sure thing, whoever's the Republican candidate will win, right? And as of right now, it's looking like T-Man could be that guy, okay? DeSantis was doing well, but, and it's going to be a long cycle. So it's likely going to be either T-Man or DeSantis. But the more it looks like it could be T-Man. And Democrats do not want T-Man back in the office. That's something we know for dang sure. And so if we have a recession going in that, it's almost guaranteed Biden's out. Biden's poll numbers aren't that great as it is. Never mind if you engineer a recession, job losses, let's say at the end of this year going into 2024, you're gone for sure at that point in time. You stand no chance, 0% chance. And so we got an interesting dynamic where the politicians are really going to try to put the pressure on the Fed to reverse course this summer. This has always been my conspiracy theory. It remains my conspiracy theory that there's going to be a major sell-off, potentially, at some point this summer. And maybe this is a start of it. I don't know, okay? And in that sell-off, they'll cause so much more problems, a lot more banks going under, a lot more bank runs, and a lot more fear in the markets in general, and force Jay Powell to then start cutting rates. And hopefully engineering the soft landing at that point in time. And if inflation's at the threes at that time, then that's not a big issue anymore. So that's kind of my thought process there. We'll see how it all shakes out, but this is going to get political, folks. And you do have to understand this. This will get political because we're going into political season. And I'm telling you, they don't want to see all of a sudden at the back half of this year, jobs being lost, recession fears, market tanking, more bank runs. It's going to look like, people don't really point at the Fed. They're going to point at the politicians. The politicians are then going to try to point at the Fed, but the average person, they're not at a level of understanding of the economic system to even understand kind of what's going on at the Fed. They just understand rates are going up. And so, unless you're super into finance, you're not going to get that. So you're just going to look at the politicians in office and say, this guy's in office, this guy's in office. They're doing obviously a horrible job because look at now jobs are being lost. This is happening. Small business going under. My favorite restaurant just went under, whatever. Okay. So that's just something to kind of keep in mind there, folks. Icahn Enterprises, this was the first one that caught my attention. The reason being is Carl Icahn is one of the most famous people in the stock market. One of the most famous, not to a Warren Buffett level, but that next tier down. Super famous. If you've been in the stock market, you'd heard of Carl Icahn, okay? So he leads this company named Icahn Enterprises. Stock's down 20% today. Now, it's a little bit of a fishy stock because you look at their earnings per share and then you look what they've been paying out for dividends and things don't quite add up. Now, what happened here today is Hindenburg Research came out with a big piece on Icahn Enterprises, okay, which is obviously led by Carl Icahn, the corporate raider throwing stones from his own glass house. Oh my gosh. Now, I'm not going to take you guys through all this. If you want to pause the video and read through all this Hindenburg Research stuff, then go ahead, pause the video and go through this, okay? This isn't it, by the way. We got another full page of stuff they go into here. I mean, it's absolutely amazing. And this isn't it. We got more here, okay? So if you want to look at all that in depth and detail, I'm not going to take everybody through that. It's going to take 20 minutes to go through all this or 10, 20 minutes to explain all this and go through all this. But it's fascinating, absolutely fascinating to see them absolutely come out and just cause that stock to go down 20% like that. Like Hindenburg Research has big pull. But my thing is I feel like people have been sleeping that own this stock. And it's interesting, Carl Icahn, if you didn't know, he was he was portrayed as a character, Gordon Gekko. He was one of a few people that was portrayed in the movie Wall Street, which in my opinion is one of the greatest movies ever in history, not just stock market, just movies, period. And he was one of about 3 characters that Gordon Gekko portrayed in that movie in 1987, being this corporate raider, right? But there's something silly going on here with this company, okay? And I don't think it takes Hindenburg research to come out. This doesn't make any financial sense, okay? One is this company is expected to, I guess, have their revenues plummet in a pretty epic way here, okay? In a pretty epic way. The other thing is, this company's going to pay, well, I don't know what they're going to pay out in the future. We'll see what they pay out, but they paid out like $8 in the past, and you just run the numbers, and it's not quite there for this Icon Enterprises. So a lot of strange stuff. I don't know what people even own this stock for, because the numbers, the math isn't quite adding up, and it seems like I don't want to say a fishy ordeal, but it seems like a very high risk stock. It says it has a 15% plus dividend yield. That's going to be very attractive to a lot of folks, but then things aren't all they're cracked up to be there. Okay, Tesla, my Tesla. Okay, yes, Tesla. So 2023, first time been a buyer of this stock since like 2019. It's been a long time. So in regards to Tesla, okay, obviously the stock has had a lot of trouble recently, and it's not for no reason. I mean, to be honest, their numbers haven't been the best, obviously, this year, right? They're still putting up decent growth in this environment, right? 18% growth in automotive margins in the last quarter, 148% energy generation storage revenue. That's incredible. 44% growth in services and other revenue, which continues to be a growth engine for them. Total revenue is a 24% growth. I mean, in this environment, folks, that's a good number. In this environment, when, it's not a great environment for selling high ticket anything, whether that means, homes, cars, any of that type of stuff, high-end furniture, it's a bad market for that. So the fact is that Tesla can still put up 24% revenue growth in this environment goes to show you how strong of a business Elon Musk has here with Tesla, okay? Absolutely incredible. Now, in regards to profitability metrics, anything in relation to that, margins, bad for Tesla in the short term. Bad. But this is a short-term phenomenon in my opinion, okay? In regards to my projections for Tesla, this is my Tesla bull case. So in regards to Tesla, I have an ultra bearish case, I have a bearish case, I have my base case, I have a bull case, I have an ultra bullish case, okay? Now, in regards to like growth rates and whatnot, I just have them doing like an average per year, of certain numbers. Now, for my bull case, I have been doing about 37% revenue growth on average per year, okay? Now, will they do that this year? Probably not, but there's going to be, maybe next year, they'll probably do far exceeding that, especially with Cybertruck fully ramped next year. So they've been doing about 37% revenue growth on average for the next 5 years, which puts them at a revenue of just over $400 billion of revenue in 2027. I have them doing about 40% on average net income growth. Obviously, they're not going to do that this year, right? But they're going to play a lot of catch up, in my opinion, next year and in future years. And so based upon that number, I have them doing just under $70 billion, about $69 billion of net income for this company in 2027. So if we're looking, I think a midpoint is pretty fair, about a 40 PE if Tesla's growing at some sort of rates like that, even if they're expected to go down, right? I've been doing, their market cap being about $2.7, $2.8 billion, which right now Tesla's market cap is about $500 billion. And so going to $2.7 trillion is quite a rise there. So in regards to my price targets with Tesla, and then we'll get into my 4 probablys here. For me, in regards to Tesla, under 200 is basically a buy for me in regards to the stock. If it goes under 150 again, that's kind of like, let's call it more of a load the boat situation if it was to go under 150. I love the risk reward. Tesla has one of the best balance sheets you're going to find. Actually, Tesla has the best balance sheet of any automaker you're going to find out there now at this point in time. The creme de la creme, and it's incredible because when I first started investing in the stock, the balance sheet was questionable. 5 years, it's now the best balance sheet in all the automotive industry. Absolutely incredible what they pulled off here. It's obviously a very profitable company. I have full faith in the management team of Tesla, in their employee force. One of the best employee forces you're going to find out there in regards to Tesla engineers. And imagine all the products Tesla's working on right now that we haven't even seen yet, that you're going to see shown off in 2 years from now, 4 years from now, 5 years from now, 10 years from now. I mean, think about those. And, opportunities that are just as big as anything they've shown off to date. if not bigger opportunities. Remember, teams like this, management teams like this, employee forces like this, they keep the pedal to the metal and they keep changing the game. And we know Tesla, that's their name of the game. So I'm really excited for where that's going. Obviously, robo-taxi opportunities huge over time. Obviously, when you look at how some of these businesses are scaling, like the storage revenue, the services, I mean, just incredible opportunities in regards to Tesla Maestro. So I'm a very happy shareholder. Tesla have been for many, many years now, and I'm very excited about where this company's going, and it's an undervalued stock now at this point in time. Okay,